Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Interesting day today. Guess so. The rip is still what we're going to do because that rally lasted about a little less than one day, and we have a lot of earnings reporting this morning, but nothing really matters except for China, it seems like. So we're going to talk about just the down market today. We'll talk about some earnings, but we'll talk about them within the context of this overall sell the rip mentality we've been in the last few weeks or so. And we'll break it all down with our guest as well, Nick Chahine. He'll join us at 8:35 to give us an options perspective on things. Joel, what's happening in the overnight session here?
Oh, we're down 36.5 handles here. We're off the low of the session. Pre-market high, 57.50. That was just above the close. Didn't spend much time there. Concentrating on the downside, our 8-day low and the low of the move was 12.25. We hit 10.25 here, folks. So some potential support in the market. Underneath that, your July 2nd low was 0350. Coming back on the upside here, I would like to see us climb into the mid 27.30 handle. 27.34 is mid-range on the session. Crude down $1.27, just kind of in a sell everything mode here at 68.09. Gold doing what gold is supposed to do in times of crisis, up 16.20 at 12.40.90. Silver still the laggard here, up 20 cents at 14.79. Triple D, in the intro, you said you're going to buy, you'll buy the stock for a penny. Are you referring to like all the stocks in the market?
Sure. I'll put my bids out there at a penny for all the stocks. I'll put some stub quotes out there. Sure.
And what about the after hours action yesterday? I mean, we opened flat. We started declining. How was it?
It was very actually quiet after hours last night. If you check the S&Ps from 4 o'clock going over to, and I'm just getting fills, so you know how when I'm trading, I got to get out of stuff. But I'm getting fills continuously. But it was pretty quiet. So from 4 till 6:30, there was really not much going on. The S&Ps were in like a 10-cent, though SPY was in like a 10-cent range. So I actually took off and went to the Detroit Red Wing game. I had my uncle was down. He had never been to Little Caesars Arena. So I popped the border, got some tickets right last second, went to the Red Wing game, came back, and really there wasn't that much happening until it really got overnight. When did the sell-off really start, Joel? Because it did not happen over here in the regular session.
Let me see here. Let me go to my. It started just at 8 o'clock was the right. That's 5 o'clock. So we started to leak. We were 56.25. The first big hit we took was like 10:15. So you're right. Now, or excuse me, 8:15. So that after 8 o'clock, after the
equities close.
Yep. No ARBs in there, right?
Yep.
To keep things in line. And that's when the party got started. And then, of course, you have China, being on the decline, and that really got things moving.
Yeah. So what happens is at 8 o'clock when the equities close, a lot of times that's when you see volatility pick up. And why is that? Because the stocks are open. So there's a lot of, arbitrage going on. There could be other bids. It could be, a lot of, it's thicker basically until 8 o'clock. And then the stocks close. And then you only have the E-mini trading. So everything thins out a little bit more. And once it gets thinner, stocks can move, or obviously the E-mini can move a lot more. Then you get some selling overnight with China opening and giving back a lot of its rally there. And then the mess starts. And then it just goes over and it flows over to Europe overnight. And obviously, that's what happens. So if you really look at what's happened here overnight and what's been happening lately is every time we seem to get a rally, we seem to just come with new sellers. And so that's why it's went from that buy the dip to sell the rip. That's really what's happening. We've been talking about this for a couple of weeks now. Anne-Marie Bain was on this show and she said all rallies to be sold now. When was that? When was Anne-Marie on, Spencer? Because that was and we were saying the same thing. We completely agreed with her. And I've been saying the same thing too, is On the rallies, I'm lightening up.
Yep, that was 2 weeks ago. That was
2 weeks ago.
That was just after
that was
the huge down day, right?
October 11th, right?
Yep.
So October 11th, and we got a nice 2-3 days. So after October 11th, thank you, Anne Marie, if you're listening. Great call, because we rallied for the next 4 days up to 281, and that was a selling opportunity. And I'm nervous, and I talked about this too. When I start lightening up my investment portfolio, I never usually sell stocks in my investment portfolio. Remember, I took some MasterCard off. I was selling some of my other stock gains. I sold some Ford. I sold some of my Micron position. I sold Micron at 43, like 5 days ago. The thing's $38 this morning. So, obviously when I'm admitting I'm wrong on some of these, longer term stuff, especially in the case of Micron, I'm nervous. I'm nervous about this market. I usually never touch my long-term investment portfolio, but I raised about 10% more cash in that last rally, and that was a great move. So I'm sitting with a lot of cash now, and I was already overweight cash, and I raised more cash. So I will be looking to buy eventually here into some of these. And is it safe to tread? I think if you're long-term, you're underweight, maybe you start dipping your toe in, but I don't think by any means we're out of the woods. Now, that being said, there is a serious test today that is going to happen on the S&Ps. The SPY had the low back, and I've been talking about a W bottom potentially. Well, this is going to be the test. Are we going to get the W bottom? I know we've had some people saying there's going to be a V bottom. That's apparently not happening now, because we've already made the bottom of the next W if we're looking at the SPY chart or the mini chart.
Yep.
So let's see what we do at the lows. 270.36 on the SPY. Can we take that out today? If we start taking that out, it could get ugly. But if we can hold 270, just call the whole area 270, then you do have the potential for a double bottom. So caution to somebody who's just coming here shorting the market today, because I think the shorting opportunity was a week ago. I think now it's like, let's see if we're going to double bottom here. So I'm actually looking and possibly going to dip my toe in if we can hold the 270. That's critical. Joel, what's the equivalent there on the E-mini?
I was just going to bring that in. That's 27.12 That was your 8-day low. Below that, the July 2nd low was 27.0350. And if you want to talk about like confirmation, we had Anne-Marie Band on a couple of weeks. Dennis, I know you had put your sell the rip hat on.
I've had it on.
Yep. Nick Chahine, who's coming on the show at 8:35, who is, definitely, tried to put the best kind of face on this decline, this market. The last 2 days, he was saying, this is just not good price action, to give back the gains. And then, I have to give some kudos to Spinner here in the chat. And, I'm not going to call him a permabull, but, he's always, pretty optimistic about the market. And I said something optimistic about the market yesterday, and he was like, look at the banks. Look what the banks did. Yeah. And what I'm trying to figure out, and, since I didn't do real good in my economics classes here, you have, everyone worried about rising interest rates, but you have the market screaming recession, with the housing sector and the auto sector. So if you have rising interest rates into a slowing economy, what's that called, Dennis? Well,
there's going to be some people that are going to argue that it is the Fed, and obviously Trump has said this, that the rates have already gone up, and that is what is causing the slowdown here now. So there's going to be those people arguing. I'm going to say, we just got overdone. We were getting crazy here with valuation not seeming to matter on a lot of different stocks, FANG exploding, so it needed to take a cooler. I mean, we have been straight up for 7 years. Really, we had, what was it? We had a 110% pullback in the last 6 years or something, overall in the markets. Did we get 20? I don't think we ever got a 20. We maybe in the beginning of the year, maybe we've had 10 a couple of times, but we haven't had that official 20. So I haven't had a bear market really going for 7 or 8 years. We're overdue.
We've had 19 a couple of times.
We've had 19% a couple of times. So we haven't had the 20, the official bear markets. We haven't had that since what? Since the financial crisis. This is 10 years straight up. Well, you know what? This happens. Eventually, we'll get some pullbacks here. And the rest of the world markets have been screaming this for a long time. I mean, the U.S. markets have been so resilient. And maybe they're still going to be the best place. And maybe it's going to, they're going to buy this dip again and we're going to go right back up. It very well could happen. But it just feels a little bit different this time because you're right. Look at the banks. Look at China. I mean, China has a rip your face off rally yesterday. It can't hold for a day. it's giving it all back already. I mean, we just, we just rallied. And look at the FXI, or you're looking at the BABA if you want, because it's obviously the most traded one, it seems like, from China's perspective. It was up $5-6 yesterday. And what, you come in here one day later and it's down $5. It gives it all back right away. So there's just people, money managers, who are overweight, and they are using every opportunity for a rally in anything to sell. And I think that's, could continue for a while. And obviously you have a lot of ETFs that are invested in all the same stocks. And if you're getting redemptions, it's those stocks that are going to sell. So it's a little bit of deleveraging. It's a little bit of risk off. Are we in major trouble here? I don't think so, but I don't think it's over yet. Let's see what happens today.
Yep.
Today is going to be the
day
big
by
test.
day.
If we can make the W bottom on the SPY, I might actually get interested and dip my toe back in and buy some stocks. But I want to see what happens today. It's going to be a very important day for the market.
And, you just talk about, we can look at the technicals and, signals and fundamentals and stuff. But, sometimes you just read stuff and you see things and it just, makes the, hair in the back of your neck go up. And I don't know what the date. I'm trying to Google the date. But what did Trump tweet? And I know this is at least a couple of weeks ago about, thank you for, you could thank me for all the money that everyone's made in the stock market. When was that? I can't find that tweet.
At the top, probably.
Yeah.
But he'll blame everybody else.
He'll blame everybody else.
Now he's blaming the Fed. He'll blame everybody else for the sell-off here. It just got overdone, guys. It was overdone. It was overdue. The rest of the world markets have not performed well at all. That S&Ps we've talked about being up 200% in 5 years or 6 years. And, you look at Canada and it's basically flat in that time. You look at China and it's actually down in that time. I mean, the U.S. is just so outperformed. It's such, and maybe that's going to continue because it seems like, China goes down more than the U.S. goes down. But in any regard here, we need to cool off. And that's what we're doing.
And also, do you think that there's a little trepidation over the upcoming midterm elections here? The public is going to voice their either pleasure or displeasure. And now, markets going into the tank ahead of it. How's things going to change in the House, or any of the few policies that Trump has initiated? They're going to be reversed if there's changes in the House, or the Senate. I think there's just a lot of trepidation here ahead of the midterm elections as well.
There's a lot of things to worry about, and that's the difference is, and we are starting to worry about those things. We had lots of things to worry about before, but everybody's shrugging it off because buy the dip just kept working. BTFD, we've joked about that, has been the best strategy for the last 7 years. Well, it's not working right now. It's not working at all. And anybody who is just coming in and buying the dip on pretty much anything is getting the beats. It switched to sell the rip a month ago. And we've been talking about the switch. It really did. And it's been working for me. Like just even last night, I'm selling different stocks into the rip, as overnight trades. Because we actually, just for instance, let's use this one, for example, I'm getting a little bit lucky with it too. I'm having a pretty good night overnight, but 3M gets bid up last night, Joel. Somebody, for whatever reason, wanted to buy stock ahead of the number. It traded up to 204 last night. I shorted it into that because I'm like, you know what? It's given me a 3-point lead because it's closed at 201.36 and somebody's that excited to go in the numbers. I mean, this is not the tape. Even if 3M blows it away, is it going to go up 10, 12 points in this tape? Probably not. It's been a rough market. And, we weren't down this much last night, but we were down. It was an ugly day for the markets yesterday. So I'm like, I'll take a shot because I think if they miss, I think it gets killed. I think if they beat, it only goes up a bit. And they're already giving me 3 points. So I actually shorted into that last night. And here I am, and I cover early, but, they missed. They let go or lower guidance. I ended up covering around 190, but it's 13 points right there.
How do you let something fall that far? How do you let something fall that far? Is it just you just turn your head?
No, I had to wait for the number. Once you're short and you're going through the number, I'm waiting for the number. So, and then I'm going to read and I'm going to analyze. And the one key thing is if you are trading earnings, and I don't do it all the time, but sometimes when you get a market like this, where you get a feel and you're like, you know what, they're kind of hitting everything, 9 out of 10 stocks, that are, obviously missing or going down. But, even the ones that are beats aren't really rallying that much, or they rally and they give it back. It's just the risk reward, it's more skewed to the downside right now in some of these reports. So when I'm holding something through earnings, I wait for the dust to settle a little bit. I don't trade that initial, unless it really seems overdone. I mean, if they would have hit it down 20 points in the initial number, I'd cover it because that's just overdone. But this was a miss. This was a guide down. It's an ugly day. I'm like, you know what? I was saying to my buddy, I was like, this could fall. You know, after I watched the guidance, I was like, this is worth 10 points. I'm like, I'm just reading the numbers. I'm like, this is worth 10 points at least. And, you know, 201.36 and, you know, you go cover 190. So you get 11 or 12. It's down more than that now. So obviously I left a couple points on the table. But when you're holding something through earnings, you got to kind of get a feel for what is it worth? I mean, it's a guy down on a really bad day. They're going to hit the stock. So, you know, even though, you know, 3M can sometimes, you know, it's got a dividend, it can sometimes play a little defense. You can't miss, not on this day. So I've got to maximize that as much as I can, because if I'm wrong, you know, then you try to minimize the damage as much as you can. And I think, you know, that's, you know, really my advantage is just reading the tape and understanding what I'm going to be right and I'm going to be wrong. I'm going to be wrong, you know, maybe even half the time. I feel like I'm better than that. I feel like maybe I'm wrong like 40% of the time, right? 60% of the time, or maybe 55, 45. But what you want to do is you want to maximize your gains when you're right and minimize your damage when you're wrong. And I feel like I'm very good at that. And I feel like that's why I've been in this business for 20 years and making money every single year in it.
It's funny when you told me you had that short and I pulled up the price. Before you said, I said, oh, did you cover yet? And then I looked at it and I knew, I said 190. I knew you covered at 190.
well, just big hole numbers. You know how I play.
There was
big hole numbers.
A 190.57 low. And, you know, it was a trade that you got after, you know, it was probably something that you didn't hedge on, right? So you didn't, you know, so you just wanted to take it. So I looked at that and good cover here. We made it. I'll just do this. Do you want to go over those numbers, or did you already do them?
Go ahead. You give the response.
We can go over them. So, I was wondering if we're ever going to go over any earnings numbers today. So here's
Spencer's back from break.
Here's the 3M report. Q3 EPS $2.58 versus a $2.73 estimate. Sales 8.2 versus 8.43 billion dollars. So a miss on the EPS and the sales for the third quarter. The fiscal year EPS guidance was light as well. $9.90 to $10 is the range they gave. $10.28 was the estimate for the fiscal year EPS. So misses across the board.
All right. Well, we recap the trading action. Your pre-market low is 185.42. Have not been able to climb over 190, 189.34. It's been the high since making that low. So there's some of your parameters. All kinds of monthly support here. Was it like 192, 193? We taken that out. We are now at, I'll keep an eye. I got a number for you here, Dennis. 188.01. That was your March 2017 low. So before we do our next earnings stock, I don't know how huge a news this is, but Tesla earnings were confirmed for Wednesday. So Brent's not sure if they moved them. They didn't have a formal date. Spencer, do you got
they didn't have a confirmed date. There was like an estimated date of next week, and they moved it up to tomorrow.
Okay. All right. So I guess you can't really read too much into that.
And maybe they really want to
get it out there.
That's what I would say.
Maybe Musk will tweet what they are today, and then we won't be in suspense, right?
Maybe.
All right. Anyways, that stock is holding up. It's down 220 here. Big number here is the low of the move at 247, I believe 247.77 or something like that. Yep, 247.77. So also another important thing to look at today is look at the day that the SPOOs made that low. Look at where your stocks were in that day. And if chances are, if they are holding the low from that day, it's showing some kind of relative strength. So if they're trading way below that, relative weakness. So if you're just looking
Great point.
If you're just looking for little keys, I'll go back and look at that day. That was 8 days ago when we made that 12.25 low.
If I was looking to buy something, and people say I'm nuts maybe for saying that, but you're exactly right. You want to see stocks that are holding the old low, so you have the potential W bottom for these here too. This is setting up, and what I mean when I'm looking at this is you're looking at the first, just explaining it. The 310 down to the 250. It's probably going to be a little bit of a sloppy W there, but then it goes up to 280, and now it's trying to make, and can it make another bottom here at 250 and then rally from there? That would be the potential for the W that I'm talking about. So this is the kind of stock that has that potential to do it. It's showing a little bit of relative strength, believe it or not, because like you said, some of the stocks, Joel, are well below their earlier October lows, and this is not. So this is one that I would actually, maybe try, maybe get a washout today, 250, 251, maybe give it a shot. If it takes out the lows, I'm out. I know where my stop is, but you can define your risk on this fairly easily. If I'm going to get this, and I don't know if it's going to get that low today, but it's a crazy day. Now market's down big. It'll be, it'll be really volatile. Maybe get it at 251 or 252. And you say, look, I'm going to stop out at 245. I'm going to give myself 6 points and we'll go for it and we'll see if there's going to be W bottom. Same thing with the S&Ps. If you want to try to play the potential of that, you could, throw your order out there and say, I'm going to buy this at 271 today or 270 and a half. If it takes out like 269, I'm out. So I'm giving myself 1%, I'm out. That's how I would set those trades up right now. These aren't breakout trades. Trend is not your friend here. But if you're saying there's a potential for the W bottom, that is how I would go around playing it. Because you can't obviously, hindsight's 2020. You can't, say, okay, well, there's a W bottom here now, and it's rallied, 10% from here in a week or something. So if you are going to say, I'm going to buy on this dip, and I think the W is going to hold, and I don't know if I'm doing that. There's a lot of momentum here. There's a lot of stocks that have taken out the lows, but I'm just setting it up for you that there is that potential. So warning to the shorts to a certain extent and the buy the dippers, take note that we aren't through those lows yet. Take out those lows. Katie bar the door. We're in a real world of hurt.
All right, let's cover two quick stocks from the YouTube chat. Cleveland Cliffs, CLF. This one, man, a lot. You hit that high near $13. You're coming down. I'm just going to give you major support in this one, and 1050. You hit that your 2-day low. It's above 1050, like this to the upside. Needs to break that string of how many consecutive lower lows or lower highs? 1, 2, 3, 4, 5, 6. So wait for that string to be broken. I would see resistance at the closing price, 1134. And let's talk the banks here. Look at Dennis, Bank America trading down 70 cents at 26.68. Yeah. That gave you the clue yesterday. It took out its former low of the move. That's a big move for Bank America.
Yeah, I have a day trade short on this. I will cover this here today, but it was just I love the 2-day move. So short this thing short this thing from this morning. Actually, it wasn't down that much, and I was like with the TLT up, I just decided to try take a short on there, and I got short over $27 this morning, even on this down day. Now at 26.70, I've covered some of it here because it's feeling like, just from my stat herb perspective, 2.5% is pretty fairly valued here now. When it was only down 1% this morning, I was like, what are they doing? And that's not down enough. So that's why I shorted it this morning. But I'm going to be covered. I've already covered 2/3 of the position in the 60s. Probably going to cover the rest of it very soon. But I mean, this is ground zero. The banks are obviously, just not looking good at all here. You've got the TLT trading up on them today, so that's not helping. And then you've got everything getting hit hard, so it's risk off. So that's not helping either. And you got people who are caught, maybe trying to buy the bottom yesterday, and they're getting hit. JP Morgan's down another $2. Goldman Sachs is down another $3. Morgan Stanley is trading lower, but Morgan Stanley not making new low on the move. Bank of America is. And Bank of America's chart is not looking pretty whatsoever. I still don't own hardly any banks in my investment portfolio. I've just got a bad taste after the financial crisis. I've always been underweight banks ever since. Is it something I would consider adding? Maybe, but not here.
If they're not going up and supposedly this rising interest rate environment, when the hell are they going to? Yeah, when are they going to go up here?
Great point.
Michael Pliny makes a question about the customer service here, and once again, you're talking about indicators. Lisa left a credit card at a restaurant on my birthday, so we couldn't recover it, so we had to cancel it. We have made no less than a dozen phone calls to try and get those cards. And they're like, oh, well, we'll call you at this number for confirmation. Then we get a call. Well, we called you and you weren't there. We're like, we're standing there right by the phone. We're like, you never called.
Is this Bank America?
Yeah.
Yeah. I remember when Josh Brown came to our office maybe about a year ago, he was giving a talk, and he said it in passing, but it was true. Not even Bank America's customers like Bank of America. No one likes them. Like, their customers don't even like them. It's like Wells Fargo. No one likes them. But anyway.
And Dennis, you're probably too young for this, but do you remember who bought Bank of America? It was a big bank in the South, and I used to love to trade it when I was at Oldie. This was even probably, I don't know.
What do you mean who bought Bank of America?
Yeah, it was Bank of California, I think, at the time. There was a Southern bank. Do you remember it, Spinner? Do you remember?
And then it became Bank of America?
Yeah, Nations Bank. NB.
Nations Bank.
Yeah, go back.
This is before my time, I think.
Yeah, and I think they were.
Griffin had it.
62,
Nations Bank.
$62 billion is what they bought it for.
Yeah. Yeah, that was a long time ago.
Yeah.
But, all right, 825 S&Ps are trying to get off the lows here. Down 37.50, 12 and a quarter, former low of the move, 10 and a quarter, today's low. So let's go back here. And
I mean, you're seeing some stocks rally on earnings. There's a few. And remember, we are kind of risk off, which means some of your defensive stocks like your utilities might actually catch a bit. A stock like AT&T and Verizon might actually catch a bit, but Verizon reported earnings here today. So it's actually not that bad of a day for a stock like Verizon to report because it's already, playing defense. And like that's a defensive name to begin with. And they come out with okay earnings. People are like, okay, that's a safe haven. I'll go there. So that's why I think you see Verizon trading up. And I wouldn't be coming in here and just fading Verizon because, again, it's got that safe haven play to it.
All right, you want to go over
numbers, Spencer?
Yeah, numbers. Q3 adjusted EPS of $1.22 versus $1.19 estimate. Sales 32.6 versus $32.5 billion. So beats on the Q3 EPS and sales for Verizon.
This stock's held up really well. I mean, even better than AT&T, although it's held up well too. But again, the environment is these stocks play defense. So it's not surprising that a stock like AT&T and Verizon are not going down with the overall market. These are going to trade more like bonds. These are going to trade defensive. When money is rotating around, they're looking for safety. Verizon, AT&T are still deemed to, at least, from a money manager perspective, they see those stocks as safety right now compared to some of these higher beta names that are falling 20% a week.
Can you see 55.50 in the book here, Dennis? Because you've hit that first of all, that was the 2-day high of 55.50. You've hit it a couple times in the after hours in the pre-market trading, 55.50 and 55.49. And then you had it spike a little bit above that to 55.90. So I'm going to use those two numbers on the upside here. If you could crawl through 55.50, 55.90 will be your last target or your next target. The only thing is last time this thing traded up to 54 and 55.90, man, it caught a cold and ended the session at 54.33. So keep an eye on holding. If it breaks above 55.50, make sure it doesn't sneak below there. And I just want to point out something from yesterday's show when we were talking about AT&T. I thought someone was sniffing around a lot at 33. Open 32.91, 32.96 was your high.
Couldn't get through 33 again. And keep that in mind. That's going to be a level for it to struggle at possibly again as well. So AT&T still has that seller up there at 33 we talked about. I don't see much on Verizon 55.50. See 15,000 shares, which is not much. I do see 100,000 shares at 56 though. So if it starts to get up, 56 will be their first test again. There's going to be some volume if it's really deemed as a safety trade. But I think up at 56, I think it struggles. So I think if you do get a lift, you might cut through 55.50, but I think 55.90-ish could put a lid on it because you do have a big seller at the point.
Okay. All right. More earnings. What about Mickey D's here, Dennis?
Green.
Yeah, it's green.
Defensive again. It's a defensive name. It's held up well. So it trades better actually sometimes when the markets are going down because it does play defense. People will eat at McDonald's. It's cheaper to eat at McDonald's when you're going into a recession. You can still eat at McDonald's for under $10. So, sometimes you're going to eat there for under $5.
$10, Dennis. What do you eat at McDonald's that you spend $10 on?
Yeah, it was $5 even, I was going to say. So, I mean, me and my kid go there and we can eat for $10. So McDonald's is, not that it's recession proof, but it's a stock that holds up fairly well. So it's not surprising if the numbers are pretty good at McDonald's, it could be your safe haven place for money too. And it's held up well. So I'm not necessarily coming in here and saying, oh, this is a big pop at McDonald's, let's just fade it. Because if it gets that safe haven label and the market continues to remain weak, money could fly into that. Now, if the market really goes weak and they start selling off all stocks, then it's different. But we're still rotating around. We have stocks that are green this morning. We had stocks that were green yesterday. So the money's still rotating here. It's not just fleeing equities altogether. When it starts fleeing equities altogether, then we got problems. And we aren't seeing that totally yet. We're seeing rotation.
Close.
Still seeing them rotate into defensive names. So give us McDonald's numbers, Joel, breakdown.
Go ahead.
The numbers on McD Q3 EPS $2.10 versus a $2 estimate. Sales of 5.36 versus 5.35 billion dollars. Comps of 4.2% on a year-over-year basis. So a beat on the EPS, a slight beat on the sales, and the comps up.
Nice move. Nice pop here. I got a level for you folks here. Your pre-market high stands at 171.74. Just back on October 10th, you snuck up to 172. So there's your area of resistance, 170 to 172. Longer it takes to get above in that area and continue, more I think it will give it back. But on the other hand, I thought Procter & Gamble would give it back off its report.
Defensive, though, too.
Yeah, I know. That caught me on that. What do you think about that, Dennis? What do you think about Procter & Gamble today? Only down 70 cents. It has that ridiculous gap in there.
Doesn't matter, Joel. It's defensive. They're going to buy the stock back up, I bet you. I think it holds. So just because it's got the defensive label, and like I said, unless they start fleeing stocks altogether, it's a Procter & Gamble that they hide in. So when money managers are rotating around and staying invested, they want to go hide in defensive names. So stocks like Coca-Cola, stocks like Procter & Gamble, stocks in the XLP. If you want to know what's defensive, go and look at the XLP. Go look at the ETF. So you can go, you can go into your Pro. I believe they have a lot of that information. But, if you don't, ETF channels, different place you can look. Look what is the components of the XLP. That is what plays defense to a certain extent. Now, in some cases, they might just sell everything off. So I'm not necessarily saying all these stocks are going to go buy these stocks are going to go higher. I'm saying they're going to be down probably less in the market. And sometimes it can actually go up on a down day. So if you're looking for relative strength, and I'm a relative trader, I trade stocks relative to each other. I'm going to say a stock like Procter & Gamble is more apt to catch a bid today than any, higher beta name, unless the market turns and then it moves. But these stocks actually a lot of times have a negative correlation with the market. Again, Procter & Gamble's defensive.
Lunch bet here on Procter & Gamble?
What are you going to propose to me?
That it does not close over 86 and a quarter.
Oh man, that's, what, well, you're down so much. So it's 86 and a quarter is down to only 35 cents. So, and it's 85.90 in the pre-market. I'll say it closes above 85.90. So I'll give you that.
86.
Not 86 and a quarter. I'm giving up too much.
86 for a lunch bet. 86. That's just another dime.
It all depends on the market starts turning around and selling off, then this changes too. So, here I am. I'm giving a bullish thesis, but do I want to be buying something, only down 0.6% on the day? I would like to buy Procter & Gamble was down 1.5%. I would buy it. So like you're saying that gap below, I think, there's going to be buyers in the lower 85s. Does it get above 86? I don't know, but I'll be a buyer in the lower 85s.
85.95 for lunch. 85.
Okay, no bet.
Oh, man.
I don't want to do a bet on this one. I'm trading stocks. I can't worry about the lunch bets right now. You give me more, and I'm more concerned about my lunch bet than my P&L. End up losing $1,000 in something because I'm worried about the $5 lunch with Joe because he's going to take me to McDonald's.
He trades hundreds of $1 million of stock and he doesn't want to lose a lunch. Jesus, Murphy.
The lunch bets mattered more to me than the P&L. I could lose $2,000, or I could make $2,000 or $3,000 or $5,000. But if I lose a $10 lunch to you, I'd be pissed off. Well, can I say that? Oops.
We've had.
I think it's okay.
We've had worse said on the show. Mickey D's. Let's see here.
Hot stocks. They're talking. Welcome Afria to the New York Stock Exchange. I believe it is right. Aurora. It's their first day on the NYSE, and they're welcoming it with a 60 as another 7% sell off. These pot stocks, I'm gonna say, I tweeted yesterday, but I think the story's over. I mean, they ran up. This was classic. They ran up ahead of the legalization and selling off after. Classic run up ahead of the news. They started selling a day before just to pull the wool over the market size. They sold off the day before legalization, but these had ridiculous runs up. So valuations were insane, and now it's coming to roost. And IGC. I put that $2 price target on IGC when the stock was 11. Go back and I said within 6 months, this is going to trade $2 again. It's $2.40. So it wasn't 6 months. It didn't even take 6 weeks here. It took about about 3 weeks. So it goes to show you, don't chase this stuff. Ride the wave while you can, but get the hell out when the trend breaks. because when it breaks, it gets ugly. I still think it's going to $2. It's only 40 cents away here now. I don't know if it's going to hit it today, but I think it's going to hit it within the next 5.5 months. So jumping over NBEV, I think the story's over here too. Again, it held up better than a lot of them multiple times, but can it get bounces in here? Yeah, but I do think eventually this is back at $2 too. And jump over. It's just my opinion, so you can say we may agree or disagree. CGC broken, CRON broken. I mean, all these stock charts are broken. I think there's so much overhead supply now. If you see a rally in these things, I think the rallies are to be sold. We got Nick Chahine coming in the background. I'm just laying down pot stock carnage here. I was saying now rallies to be sold. What are your thoughts here on the pot stocks, Nick Chahine? And welcome to Pre-Market Prep.
Good morning. We'll start with pot, I guess.
Everybody likes talking the pot stocks. So it was legalization. They ran up way ahead of the news in Canada. So they ran up. It was classic run up ahead of the news and sell off after the news. And they've been selling straight off ever since it's been legalized there. Thoughts here on the, you're more price action. And you do a great job with charts on that. Let's go to like a Tilray or something. We haven't talked Tilray in a while. You had the big run up to $300, the big sell off after. It hasn't made new lows, so it looks a little bit better than the other ones. But man, that's an ugly candle yesterday. Thoughts on pot and Tilray?
Okay, so pot in general, the concept seems viable as they describe it. I'm not an expert on the subject or the matter, so I have to take their word that there is a point to be made as to it is a viable option for recreation down the line, and in the form of liquid. That's what they're talking about as far as replacing in a soda format to replace drinking wine or whatever. So I can't deny that. I can't say, okay, it's a great idea, but it sounds doable from a concept. So I'm not ready to pull the plug on the whole sector. And from the price action, okay, I can't argue with you saying, okay, that the bounces are sellable. But it's hard to judge the sector while the stock market is in the same pickle, technically speaking. So we are testing recent lows or recent tests that we've done before. So the 2,700 on the ES, for example, if you're talking about Tilray, what was the last test of 123? What is it this morning? 100,
106. So you're going to test that low probably at the move to 97. You could test that today, potentially.
So we had the huge spike, and then it came back down to earth at around 100, and then it spiked again, and it came back down higher than that, and now it failed at the higher level and back down to the 100-ish. So
that's 100 hold.
Yeah, so I'm not ready to call it a sell. And if I own it and it fell to 100, that's not the point where I leave. That's the point.
Great point. Agreed.
That's the point where I decide, okay, so do I really believe in my thesis still? And if I do, I maybe add a little bit or wait for the market to stabilize a little bit and add. But I don't think you can wait with these guys. They move like, $30 a day on a basis of 100. So it's a gamble. It's a bet at this point with a little edge. So if you do your homework, if it's viable, then you have some edge. You say, hey, this is viable. This is just price action. But to tell you the truth, all of these market-wide movements make judging this sector based on today's action unfair. So I would not judge the sector. I would judge the price action just as I would judge the S&P today, because I can say the same thing about the S&P holding 2710. So if it doesn't, 2610 could come in a blink. On a technical basis, it's a huge head and shoulders pattern developing here. So
it's a great point. And I don't know if you were listening earlier, we said the exact same thing. I said, you have the potential for a W bottom still, because we have not taken out those lows of October. So we don't know that. We're still, today's going to be the big test. Can we hold that 270 in the SPY, that low from October, the 9th or the 11th? When we got down to 270.36, we're 80 cents away from there right now in the pre-market. So can we hold it? If we do, we have the potential for a W. And a stock like Tilray would have the potential for, it would be an ugly W, but, it could bottom 100 again there too. So I do agree with you. I think if you're selling these things now, I think you're kind of, late. It was really like the sell on the news was, in hindsight's 2020, obviously, but, there's already been a lot of carnage here. I mean, if you look at, Aurora Cannabis, which is just listed, this was $12 4 days ago. It's $8 here this morning. So it's down, 50% or 12, I guess, going the other way. It's down 33%. in 3 days. So it is kind of late to be selling. I was just saying, if you get a rip, I think there's overhead supply now, and that's when I would be lightening up. I always like buying dips and selling rips. It's kind of how I trade. So when the market's down 400, Dow points, I'm not looking to sell stuff usually. I'm looking to maybe, buy, and obviously maybe some move around. But if my thesis has changed and they get a nice rip your face off bounce, and then we will get one eventually, that's when I lighten up.
Yeah, I would even say that it's hard to trade intraday. I did catch the move up, and I had some sold puts and put spreads. I couldn't book the profit because the IV spiked in the stock, and they ratcheted up the broker parameters for it that I couldn't even get a good quote on a put to buy it back. So I had to overpay to buy back my profits and leave a lot of money on the table because I just couldn't book the profit. It was insanity for Tilray. And it's less of an insanity for CGC, for example, but it's also difficult. If you had a put spread and you wanted to close it and you give it the mid, usually it fires within a penny or two and you get a fill. But I couldn't get you have to overpay when you're trying to close something. And it's really difficult to day trade these just by selling puts like one can usually do.
Talk about CGC. I mean, Kramer's been saying this one's best in breed. He's been pumping it. And obviously he's got some egg on his face now here because this thing is down, we're down 30% here in a week and a half, $38. Is this, now the opportunity here on the pullback? But I see a lot of air here on the chart of CGC, and I see air like down to 30. It's so scary to just say, okay, it's going to be 38 is the bottom because it's 38 this morning. I mean,
okay, so 38
down for us. If you're a pot believer here, where do you come in, and say, okay. I like this sector, and I own 0 pot stocks. Right. But I'm kind of a believer. Like, I believe there's going to be an industry here. So I believe at some point in time there will be some buying opportunities. There's valuation that scared me away. But at a certain point in time, stocks keep coming down. They keep coming down in price. Valuation will eventually become attractive. At what point do you think like a stock like Canopy Growth, which, Jim Cramer thinks, and maybe he's right, is, best in breed. At what point do you think that one could be a buy?
Well, everything we said so far applies here. So it's testing recent lows and then some right now, but I'm eyeballing the rip. So if you call it from the 28 level, this is what a halfback check. So if you're a Fibonacci guy, so it's a retracement that usually is a buyable thing. But out of all of these stocks, this is the only one that is a fortress. So they have probably $4 billion in cash because of the investment they got from STZ. So if I were to pick one, this is the one I pick to be long.
So you agree with Kramer that this is best of breed?
I agree that
he said, I'm not trying to put words in his mouth, but he's talking about Canopy.
I think he's even said it's a buy right now, and it was above 40.
We said it 2 days ago. It was 48. It's a buy right now. It's 38.
Right.
So get 10 points cheaper.
Right. And so if you believe that he knows a little bit what he's talking, I mean, whether you like him personally or not, but from a fundamental basis, this is a best balance sheet. And if you think that their P&L is going to be healthy down the line as an industry, so this is the one to bet on paper. I don't know the industry, but if you told me you need to buy a pot stock, if I don't buy MJ and throw a blanket on the whole thing, this would be the one I pick.
All right, Nick.
I think I'm the same opinion there. Right. If I want to buy a pot stock.
Are you ready for the toughest stock that I've ever gave you to analyze, both fundamentally and technically, Nick? Are you prepared?
Oh, what? Tesla?
No. And this is something that I talked about on the show.
GE, what?
No. And I talked about this on the show yesterday, and Dennis, you poo-pooed me on this. The symbol is LQSIF. Okay.
Oh, it rolls off the tongue.
Okay.
I don't know what the hell that is. I forget what that is already.
Just listen, Dennis.
I got nothing for LQSIF.
You don't? It's Elcana. Okay. And Elcana,
it's over the counter.
It generated $1.3 million in cannabis sales in Alberta over the first 5 days. So here is a company in the sector that can actually benefit from people buying. It reaps immediate benefits from people, So what do you think about it? So you can't even pull it up. It's really.
Oh yeah. Hold on.
It's really thin.
It's got the dividend as well. It's actually got a dividend. It's 3.6% dividend. This is a real company, actually, and this is traded over the counter. So its market cap is 281%, but it's got, I don't know if that's right, but it says it's got a 3% dividend. So I think it's right.
Sounds like you have your made up on it. So
I am. It is, but I just want
to
buy it.
Do you own this, Joel? Did you buy this?
I'm gonna today.
You're gonna buy this one.
Yeah.
What is it at today? I was looking at.
Well, I think it's over the counter, so it won't trade pre-market, but it'll be down probably. So that's 756 yesterday, so there's no market yet.
Well, 7 looks like a bottom of late, so go for it. What can I say?
I get $7 today. It's gonna get everything's ugly.
Yeah. Maybe I'll hold on.
Talk about capping your loss right there.
All right, well,
$7.
maybe I'll put my bid in there at 7 then, and it'll be the only bid in the book here. But no, I just
that's a great point you're making there, Joel. Is if you really like a stock, and this is what people are scared to do. But if you really like a thesis on this, these are the opportunities where you strike. And you throw your low ball bid out there, and and I know this is what he does too. He's writing, the puts and stuff when the carnage is out there. But you throw your bid out there, and if it hits you, you've got your stock at a pretty good price. I mean, sometimes things just get crazy, and this is when you can get those good companies at a cheap price. I know you do this too, Nick, from your fundamentals. You write puts when there's carnage out there, correct?
Correct. But I need a tangible reason and tangible value.
That's not that they had $1.3 million in cannabis sales in Alberta over the first 5 days. That's not.
That's some numbers are meaningless, though. I don't know anything about.
But we don't know any. I mean, I don't know. $1 million
in sales. I
don't know what kind of sales. Was it a wholesale sale? Did somebody walk in and buy the whole store? We don't know.
What's the whole? I wonder.
We don't have any more color. We need more color. And me and Nick aren't fully fundamental analysts. We technical guys.
And how many of those
fundamentals?
We like fundamentals, but.
And how many of those sales?
I call myself a fundamentalist.
How many of those sales weren't from Dennis? You got to factor that in too.
I'm loaded up on the pot now.
He looks pretty chill this morning. Yeah.
You got it. Hey, marijuana sales got to go up when the market's getting hit this hard, doesn't it?
Dennis took 13 points out of a triple M trade. I mean, what else does he need to do?
Nick, oh my goodness.
Nick, I just wanted to, Rob Hood is very good. He's asking about GameStop here. And I'll pull the chart up. I think there's other places to put your money here. GME. I mean, I don't know. I mean, you can lean on the low of the move at 1226 here, showing a little life, Nick. And you say anything positive here about GameStop?
Okay, so I don't know what it's doing this morning, but I would probably go long above 1550 because that would kind of erase where it failed last time. And I would say if it does that, then it probably has a chance at 16 and a quarter, 16-ish, 16.10, which is just the eyeball target of that. Meanwhile, the overall range that you see is like from 13 to 17 almost. And right here, it's right in the middle. So it could go either way. So there are 2 breakout points. One is a breakout, one is a breakdown. I already mentioned the breakout. The breakdown would be losing 1450 or so. I know these are round numbers, but that's what I'm seeing on the chart. So that would be the chase it or dump it levels. Or chase it in either way, I should say.
Okay, Nick. Also, this is just kind of backing up a little bit. Dennis made a good point about technical and fundamental, trading. I know you do a little bit of both, but sometimes you just strictly just go with your technical hat. And talk a little bit about those kind of situations. What they're obviously the rare situations you're looking for. Just give us a little background into that.
Into again what the levels
when you just trade fundamentally a lot of stuff, but sometimes you just hey, I'm just buying this and this is just on technical or I'm doing a trade in it. Just talk about the dynamics behind that and perhaps some of the things that you look at.
If you're a fast trader, meaning if you're watching the market on the intraday and trying to find opportunities, but that also applies on the longer time frames. So if you see a technical opportunity prevailing, then you say you set your targets. I put an alert in the platform, and I say if it gets to that price, alert me because I can't watch everything at all times. So I look at a chart and I see, like you just asked me about GME. If I was interested in GME, I'd put an alert at the levels I said. If I'm long the stock, I'll put an alert to get out if it loses the support levels that I'm comfortable with it losing. And conversely, if I'm looking to chase it, I don't buy it because it's looking like it's forming a cup and handle. I'll put an alert at the neckline of the cup and handle. And once it crosses that, It still has to close above it, so it depends on the time frame, and you chase it there for that breakout. So if that breakout fizzles, I get out. I don't turn the trade into an investment.
Okay. All right.
I mean, that's the main thing is the discipline to get out. And
Yeah.
that's, I think, what a lot of people struggle with here. And we've got a lot of, newer traders that have just come in the last 3 or 4 years. And every time, we've talked about this, every time the market's dipped 3-4%, they've, bought and saying, yeah, hey, look, it bounces back. It always comes back. And so they'll just hold through the pain, knowing that eventually if I hold long enough, I'm going to get my money back or I'm going to make money on this trade. But in the long, long run, that doesn't always work. So I still think it's discipline and having, the courage. And I think it takes courage to say, hey, I was wrong. And I'm going to, now, lighten up or get rid of this position as opposed to letting that trade become the investment.
Yeah, because even if you're right fundamentally, but the price action is disagreeing with you, then you're going to lose money because I was long CGC for a last effort and it went against me. I booked the loss because whatever I had going is like, okay, I don't see what I saw, so I'm out and I'll trade it.
Thesis changed.
Well, the market was falling and I'm not going to buy the froth. When the market is falling, the froth falls faster.
Yep.
So, or at least the perceived froth.
Yeah.
That's why if I wanted to short any of the the chip sectors, for example, I'd short AMD because it has the most froth. It's still up 50% year to date, whereas Intel is down 20%. So it's in bear market territory. And so depends on what you're chasing.
All right, Nick, one final question, another tough question for you here. I know you were frowning on the market action the last couple of days. I know that from following you and being involved with it, getting your communications. So what does the market need to do today? What would the market do today that Nick would say, boy, we really dodged a bullet there, and I'm going to try and put my bull hat back on.
So I need to see fear today in the open, and it looks like the numbers bear it. And I need to see a strong push sell, and I need to see an emphatic shrug of it, meaning they take it, they base, and they close well. They being the market in general, and especially the leaders. I need to see a broad bounce, not just the FANG bouncing and taking the indices up, because the FANG have an event. So anything they do now is meaningless. Like yesterday, I was talking to everybody in the chat room saying, they're talking about, we're closing well. I was like, it doesn't matter how well we close. It's all going to be reset at the open because we have turds reporting. So the Dow, is going to be hit this morning regardless because he had Triple M, Caterpillar, UTX, and they weren't going to tell a good story because they are at the most disadvantage of all the stocks we're looking at. So it's all about what's rising to lift the indices. I am bullish in thesis, but I am bearish for the fact that we do have very legitimate threats. The Fed is number one, and then the technical is number two, and they can play off each other. Good news is bad news is bad news. We need something to flip one out. So we need somebody to say the Fed is actually data dependent, even if they don't say it, then the market will be fine. But I need to see a good scare, a good base, and a broad stabilization and some good close broadly.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Joins the show every Tuesday at 8:35 a.m. Eastern Standard Time to share his fundamental and technical outlook on the market. Nick, a pleasure as always. We'll be talking to you soon. Maybe if we have another super wild day this week, maybe we'll just we'll get you on again just for some more comments.
Sure thing.
All right. Thank you.
Great.
Yeah,
Great stuff.
Great information, and it's always great to have Nick on. Gives a two-sided look at S&Ps are climbing back here.
The thing your mic went out. Just flip it again. There we go.
We lost Joel for a second.
Oh, no, you lost me.
He's back.
I'm back.
Yeah, he's back. You know what? I just want to expand on, and Nick said it great here, and what he needs to see today. And I need to see the same thing. I completely agree with what he just said. We need to see, the market take this. It's going to get hit here hard this morning. We need to see it take it, and stabilize and start to catch a bid. What I want to see is buyers come in here shortly after the open, maybe a little washout in the first 10 minutes, maybe wash us down to that 270 SPY level that we're talking about, maybe wash us out, on a Facebook down to the 150 level where we bought them before, maybe wash us out on Netflix down to the low of the move, which was back in August at 310, maybe wash us out, but hold those levels. And if we can hold those old support levels, then you'll get some people thinking, whoa, we're holding support, and then maybe some buyers can emerge. I think that could happen. So I'm, right now I'm overall net short the market right now. I plan on getting flat here shortly after the open. I plan on getting market neutral. And then I'm going to analyze, obviously. I'm not talking about long-term investment portfolio. I'm talking about trading portfolio. Right now, I'm net short. And I'm going to probably cover here shortly, like 5-10 minutes, put some lowball bids on some stuff to cover. Short cover 10 minutes after the open, then let's see what happens. Can we bottom? And probably on some of these, I'm looking at the S&Ps. When the SPY, if it hits, and I think it's going to test it, that 270.36. If it gets down there, I might actually try it from the long side, just because I think there's a potential that some other people might be thinking, yeah, we're going to get to these support and we could have a W in place. So I think there's a potential where this could actually turn around today. But I'm not going to, gamble all my money on. I'm going to get in market neutral and then start to analyze. And we look like we're stabilizing and starting to catch a bid, then I might try to get long. But if we, for whatever reason, start just cutting through all these old support levels like a hot knife through butter, then I'm going to be getting out of that trade. So I'm going to give it a very short leash, but I'm actually probably going to be trying to buy stocks on this dip today with a short leash. I want to see immediate gratification. I want to see a bounce start happening at the old support levels. And what I'm talking about is the levels we're at a week and a half ago on all these stocks. I want to see them bounce there. And if they don't, then I'm going to be getting out of them and taking the small losses. But I'm probably going to be trying it for the bounce trade today off those old support levels. Joel, what are your thoughts? How's your plan?
No, I mean that this 12.25 is a target I had on the downside for short for since we made that low 8 days ago. So I'll implement it that way. I don't know about buying stuff here. I kind of just would like to see more of an intraday rip. Maybe get back into the 27.30 handle. See how 27.34 is mid-range on the session. I think though for laying out the big shorts, I'd love to see us, and probably is not going to happen today, but get near the low of yesterday's range, 27.50, 27.49.75. That was the low from yesterday. Now we are 30 handles away from that, but you never know what can happen in these crazy markets. Let's talk gold a little bit here, Dennis. Gold getting a nice lift here, doing what it's supposed to do in times of crisis. Yeah. I mean, you had all kinds of chances to buy this thing under 1,200. Now you're up at 1,240. I see Newmont trading up 88 cents. I mean, when is the last time Newmont Mining has ever been up a buck? I just can't imagine. That's probably
well, you know what? I can tell you when it was. It was October the 11th when the market was going straight down.
Really?
Yeah, it was up a buck. It was up to almost $2 that day. So that's what happens. Gold catches a bid typically. So it's doing what it's supposed to do. Gold is at least doing what it's supposed to do. Is it going to, continue? This gold, they'll pull the rug out from under it as soon as there's some stabilization in the market. So I think if you are overweight gold in your portfolio, I think it's a fabulous opportunity to lighten up gold, because gold, the GLD especially, has caught a bid, in the last week and a half because they're worried about the overall market. I mean, if you're really, really, really scared, gold is still going to outperform in this environment. But I'm not fully in the full on bear camp here. I came with a bear cap on here today, but as I'm still looking at charts here through this hour show, there's a lot of lows that are still being held. So if we can hold those lows, then, and if you see this market start to turn around, careful with the gold because it'll turn around here too. Nice bid this morning just off that, but I still think long-term gold's in a downtrend and secular decline, and I'm a seller of rallies. And this is a nice rally to sell into.
And also, just look through your earnings stocks here that are reporting later in the week. If you were thinking about playing stocks long in the earnings, if that's you're so inclined, I mean, there's a lot of stuff on sale here today. So good day to perhaps do that if you want to, if that's the way you play things. Also, I mean, I don't know who mentioned this about Tesla in the chat, but people are banking on some good earnings here in Tesla. Have we had any additional news out since they officially announced the earnings date for tomorrow? Is there anything?
No.
Okay.
No, I've
Tesla
seen
getting a
nothing.
bed.
Yeah.
Tesla's up $8.
You know
What's going on with Tesla
Who
right
better
now?
to
I don't know if I don't.
Who better
What
to
is
talk
going on
about
with
Tesla,
Tesla?
Dennis? Who better to talk about Tesla? We don't have Elon Musk. No, you can sit here, Raz. We're gonna have
Oh,
Raz.
Jason Raznick coming in.
I want to hear it though. I'm gonna have to get on someone else's phone.
All right, so
You've got a couple commentaries just before Jason comes in.
Yeah,
I'll just
yeah,
say so. The Q3s. So you got Elon Musk. There are multiple headlines here this morning, Spencer. You got News Street saying could be a major FCF beat here on Wednesday. Our numbers could be good.
Jason, are the numbers going to be good tomorrow?
I think they're going to be good. Now, here's what I'll say. They already gave you the numbers. They gave you the results a couple weeks ago of production numbers. But you guys saw that letter that Elon was cutting costs, and there's a lot of costs that have been cut. I think if Tesla announces a profit, the stock will pop. It may drop because some of the people on the inside have thought this would happen for a while. It's the naysayers think there's no way they're going to produce a profit. I don't know about you guys, but are you seeing Teslas around the neighborhood these days?
Seeing more of them. I mean, and not only that, you see these charge stations popping up everywhere there too. I mean, the infrastructure is starting to come in here. I think if they make a profit, I think it is going to pop. And I don't mind the technical action here either. There's been buyers down here in the 250s. It's looking great here this morning.
Yeah.
Lifting $6 in a terrible tape. I don't mind the pricing action here in Tesla.
Yeah, I go to Joel Elconin for my technicals, and he told me they're support at 250. I back up the truck at 255 on it, and I bought more on that point. And like I said, I still own it. I told you guys about 6 months ago or whatever that I think a Model 3 will be in every parking lot. They just finally got the rear wheel drive. That's at $35K. A lot of people are waiting on that one. And the thing that's amazing to me is there really isn't a strong competitor right now. Everyone talks to me about the Porsche, the Cayenne, not the Cayenne though, one that they're going to be introducing that's going to be a competitive Tesla. And it's just not out there yet. And what's going to happen is, in my opinion, Tesla's going to have so many cars out there. They're going to become connected that they're going to be, the power of each car on the network will make the company more valuable. By them being a digital company and downloading software, like Tesla did not have blind spot awareness as of 2 months ago. Do you realize that? So a lot of cars have mirrors that with like a little light, if there's a car in your blind spot, literally 2 month ago, for the last 5 years, didn't have it. 2 months ago, or about a month ago, actually, they released an update to the software. So anyone that has the Tesla with the 8 cameras now has blind spot awareness. That's the power of this company. Think about what they could do in subscriptions they can create if they get enough volume of cars and rental service. Think Uber. What does Uber trade at, Spencer? 120 billion in valuation, some crazy number like that. And Tesla, I don't even know what it's at, but it's not. It's not a straight comparison. Just
let's give the update, Spencer. Where's some Tesla market cap here right now? It's come off to 44 billion.
44 billion. Yeah. I'm not saying it's cheap company. I'm just saying I think there's more upside here. But listen,
if they start making money, it could look cheap. And there's that one. I don't know if you know the Guggenheim analyst, Jason, but there's a Guggenheim analyst that was saying they could make $20 a share in 2020. If that happened, or 2021, I think, if looking 3 years out, if that happened, every bear thesis flies out the window. The thing's all of a sudden, got a P multiple of 12. Yeah. I don't know if that can happen,
Dennis,
but that would be crazy.
Dennis, a little off topic, but I'm trying to get a group going to the Benzinga FinTech Summit the day before getting a Tesla tour inside the San Francisco factory. It'd be pretty freaking cool. So if you want to get out there, I'm going to try to get like 15 people. So yeah.
All right.
Love to see the Tesla factory.
Yeah. It'll be sweet. So are you going to trade this one or no?
I do trade Tesla here and there, and I like it down to 250. So when we were saying it was 259 when we were starting the show, and I think Joel and I both were saying this is a stock that sets up well. Obviously, it was a headline that drove us up here over 265, 266 here in the last 10 minutes, but I think I like it in the low 250s as long as it holds. And I would probably cut out if it went below 245, but always scary to hold something in the print too.
Now, one thing to note: last earnings, people were not expecting much of a move on Tesla, and it had a significant move. This earnings, I am saying there should be a big move, and it could be the opposite. So you got to be protected. But I think that as Joel and Dennis have alluded to, this 250 support is there, and I think you're going to see some strong numbers out of Tesla tomorrow. That's my prediction, and I'm holding to it.
Joel, what's up?
I just want to make one comment, two comments, and something, Jason, that I've talked about with you, and it's also like Gene Munster's thesis is that, if Tesla's, these driverless cars, it's like, what are people going to be doing in their cars when they're not driving? And they're going to be on their computers. They're going to be on the internet. There's going to be subscription services. I got in an argument with a guy in the locker room at the JCC about, driverless cars. It's going to happen. Look what's happening to the U.S. car industry. They've been behind the 8 ball here and going into this. I mean, I might be a little bit crazy here. Maybe I watch too much of the Jetsons, but things are changing. Things are going to change in the automotive industry. And who's going to be the leading technology company to do that? Right now, the front runner is Tesla. So I'm going to have to add it to my portfolio today.
Joel, you are 100% right. I mean, I've been in it, driving in it, and you literally, the way they have it, you could almost not drive if you're on the expressway, not have to look at anything. It's already that far, and we're just in the beginning. I mean, it's a crazy time.
You know what the best thing to be about driverless cars too is that there's no way that Lisa can complain about my driving.
That's a great point. That's
You're driving too fast. No, I'm not.
My what? Yeah, no, I'm not.
We complain about how the car is driving.
Yeah, exactly. So I have to complain to Elon. Elon's gonna be on Twitter blast for Lisa Elconin. All right, guys. Thanks for having me on. Exciting show, and looking forward. Maybe we should be going live tomorrow for Tesla earnings. Who knows?
Whoa. We'll see.
All right, guys. Thanks, guys. Bye-bye.
All right. And on that note, that'll do it for our show. So thanks to everyone who joined us today in our chat rooms on YouTube and premarket.benzinga.com. Thanks to our guest, Nick Chahine, for stopping by as he does every Tuesday. I want to remind you folks again about the Benzinga FinTech Summit coming up November 14th in San Francisco. If you go to bzsummit.com, enter the promo code PMP VIP, you'll get 80% off your ticket. And for all you traders who trade off the news, you need Benzinga Pro. To get 25% off your Benzinga Pro subscription, go to pro.benzinga.com, enter the promo code AMPRO, AMPRO. And on that note, everyone have a good day, and we'll see you on Wednesday.